Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're embarking on a deep dive into Marvell Technology, that's MRVL. We're using our research from, November 6th, 2025. And the big question really is about this huge price explosion we've seen. Is it, built on solid financial ground? Or is it just a compelling story driving things, maybe a story that's already over?
Yeah, it's a fascinating setup. And maybe let's start with the bigger picture, the market environment. Our research shows things are actually looking up. Analysts seem to think that whole rolling recession idea, where different sectors contracted one after another, that seems to be over.
Okay, so the backdrop is improving.
Definitely. We're actually seeing the strongest earnings growth since back in 2021. So for semis, for this sector, it shifted from being a headwind to, more of a tailwind.
Right, a tailwind helps, but it doesn't explain this vertical move in Marvell lately. That seems tied to something else. Our research points to this really tantalizing rumor, right, that SoftBank was maybe looking at a takeover earlier this year to merge Marvell with ARM.
That's the story driving the hype, yes. But, and this is crucial, the reports are very clear. There are no active negotiations happening right now. That exploration seems to be in the past.
So a dead rumor is pushing the stock over $100 pre-market today.
It seems like it.
Yeah.
And that's where the fundamentals just don't line up. When we run the numbers, based on cash flow.
Yeah. What does that show?
Our fair value estimate comes out around maybe $64 a share, give or take.
64. Okay, but yesterday it closed near $93, and you said over $100 pre-market. That's a huge gap.
A massive disconnect.
Yeah.
Between the market price and what the underlying business financials suggest it's worth.
Okay, hold on. If the stock's trading, $30-40 over fair value, why are 70% of Wall Street analysts still saying buy or strong buy? Are they seeing something else or just chasing?
Well, you do see momentum chasers. And look, the story is powerful, but we are starting to see a little bit of caution creep in. Just a few of those former bulls have recently shifted their ratings down to hold. It's not a flood, but it's a crack maybe appearing in that bullish consensus.
Interesting. But what about where people are actually putting their money, like the options market?
Okay, yeah, the options market. It's screaming optimism. Totally different story there. That put-to-call ratio, it's down at 0.4. That's extremely bullish.
0.4. Wow. So for every put option betting it goes down, there are 2.5 call options betting it goes up.
Exactly. It suggests traders, maybe more retail folks, are really piling into bets on further gains. Very confident.
And what about the short sellers? The bears? Are they getting squeezed?
They're around, but not in huge numbers. Short interest is moderate, 4.97%. So it's not like there's this massive pool of shorts waiting to be forced to buy back, which could add fuel. The buying pressure seems more organic, or at least rumor-driven.
Okay, so technically the chart must look pretty good then, with this momentum.
Oh, the trend is definitely up. Accelerating, even. Visually, it looks strong. But, and this is a big but,
there's always a but.
the volume picture is really, really mixed. Contradictory, actually.
How can volume be contradictory? Isn't it just how much is trading?
Well, depends how you measure it. One key indicator we track, the accumulation distribution line. It suggests big institutions, the big money, are actually buying, flowing in, which supports the rally.
Okay, so big money is buying. So what's the contradiction?
Another indicator, one that measures sort of the daily buying versus selling pressure, that one is deeply negative.
Negative, while the price is soaring.
Yeah. It suggests that while some players are accumulating, others, maybe more informed, short-term traders, are actually selling into this strength. Using the high prices to get out adds another layer of risk. Volatility is high and it's rising.
Okay, wow. So strong momentum, crazy option sentiment, but stretched valuation and conflicting volume signals from, let's say, different types of traders. So putting it all together, our research leads us to what kind of outlook?
We have to land on cautiously bullish. The momentum is undeniable right now.
But heavy emphasis on cautiously?
Absolutely. And you, listening, you need to be aware of the main risks here. They're pretty clear. First, the whole rally is balanced on this ghost rumor. A potential deal that isn't actually happening. That's shaky ground.
Right. Risk one, rumor dies completely.
Risk two, that fundamental valuation. It's not just stretched, it's way out there compared to the $64 fair value we calculated. Gravity exists eventually.
Okay. And the third risk?
That conflicting volume signal we just talked about, that negative pressure suggests smart money might be distributing shares, selling to the enthusiastic buyers. That's often a warning sign.
Got it. So if you're navigating this, watching the ticker, what are the key price levels to watch in the immediate future? Where's the battleground?
Okay, for the bulls, the target has to be that pre-market high, up around $104. They need to break through that convincingly to show this isn't just a quick spike.
And the downside, where does the magic wear off? The invalidation level.
That's the low from yesterday, around $88. If the price breaks below $88, that tells you the immediate breakout momentum has likely failed. The rumor's power is probably fading fast at that point. That's the critical line in the sand.
So Marvell right now, it's really a classic case study, isn't it? A powerful story, a narrative completely overpowering the spreadsheet fundamentals, at least for now.
Precisely. Story versus spreadsheet. And right now, the story is winning big.
But stories can change on a dime. Narratives shift fast in the market, something to keep in mind.
That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.